Calgary market shift towards balanced market. Welcome to October Real Estate Market Update. I'm Uros Markovic, Calgary and area realtor, and I'm here today to tell you how September finished up. October is here already, and while the weather in Calgary has been quite mild, the real estate market is cooling off. Or is it? Usually at this time of the year, we are speaking about seasonal slowdowns where sales and listings both drop and the market stays about as tight as it was earlier in the year, just with less overall activity. That was the case in 2023, but 2024 is different for a few key reasons, all of which have the last quarter of the year positioned as the best conditions buyers have seen in several years. So let's say that we are finally in a balanced market. The major news for Calgary is that in September, Calgary came in at 2.35 months of supply, right at the balanced conditions between buyers and sellers. Calgary began this shift in June, right at the start of summer, and has been steadily softening since then, with months of supply increasing from less than 1 month of supply to over 2.5. The strong sellers market conditions have been effectively erasing in the just last 5 months. This trend is in contrast to what we observed to all 2023, when we had less than 2 months of supply all year long. In fact, if you were to look at September of 2023, you would see we were all into sellers market territory even as we entered our seasonal slowdown, a much different condition than we have today. We are starting to see a rise in new listings in our market. However, most of the listings growth is occurring in higher price ranges over 700,000. So let me help you paint the pricing picture. For a third consecutive month, we have seen price decrease to the point where we now nearly match what they were back in March at the height of a spring market, when we had less than 1 month's worth of inventory for buyers to choose from. In September, price dipped below 600,000 to an average price of 596,900, while sales continued their decline to 2,003 units exchanged over the past month. Let's take a look where those changes are for each property type and district. We will start with detached, holding up right at 2.5 months of supply at the balanced market boundary. Benchmark price is 747,100, while the most of the districts remained flat to the months before. More noticeable changes were in the southeast, where there was a decrease of 2.1%, north decrease of 1.64%, and east with a decrease of 1.62%. The price gain compared to the last year was 8.76%, so still not too bad. Semi-detached homes are still at the seller's market at 2.08 months of supply and the benchmark price of 678,400. Overall price decline was only 0.41%, so almost the same as the last month. North had seen 1.66% decline and West have seen 1.6% decline, and the southeast 1.91% decline, very similar to the detached segment. However, comparing to the last year, there was a gain of 9.53%. Let's talk about raw townhouses. Well, they are very much still in a seller's market at 1.98 months of supply. The benchmark price is 459,200, and overall price for raw townhouses are only 0.5% lower comparing to the last month. Prices in a northwest district went up by 1.44%, while in a southeast prices came down for 1.74%, still 10.2% higher than at the same time last year. Well, now it's a time to talk apartments. They're in a mixed situation. Overall, it is a balanced market, but certain districts are performing better than the others. Benchmark price was 345,000 even, almost the same as the last month. Although Central District saw 1% decline, while the West had 1.5% increase. All of the other districts remain virtually unchanged. Compared to the last year, apartment prices are 13.86% higher. So you might wonder what is behind the slowdown. Why is it happening? And do Calgary homeowners have to worry about anything? But there are a couple of things going on. First is that we have had very strong sellers market condition for several years. It is expected that the market is going to lose some steam as we go. In fact, you would need to go back 3 full years to September 2021 when the last we had balanced market condition in Calgary. It means that we had 3 solid years of run in a full blow steam sellers market. Another reason is decreasing interest rates, and I will elaborate more on that just a little bit later in this market update. Many sellers were holding off selling their homes because they were not in a position to trade up and down because of the high interest rate environment. With rates coming down, they're finally starting to list their homes. Unfortunately, some sellers are making matters worse, thinking that it is still very much strong sellers market condition, taking the aspirational approach to pricing their listings, more or less looking at the last comparable sale and asking for just a little bit more money for no reason than the market is super hot. This has led to buyers not being excited and low quality, high price listings sitting on a market and dragging down sales statistics. But this is not a systematic issue that is likely to continue. Interest rate decreasing, mortgage rule changing in December, and economic fundamentals are just too strong in Alberta, and by extension, of course, in Calgary, and so it is unlikely that those conditions will persist much past the winter. Alberta population is set to increase considerably in coming years, mostly from interprovincial net migration, and so demand is sure to return, but perhaps at more modest levels than what we have seen recently. To be honest, this is really an excellent time for buyers. Other factors that draw buyers back are in the recent reduction in interest rates and the general expectation that they will reduce even further over the winter months, which is causing some buyers to pause as they wait for the bottom of the key lending rate changes to arrive. The federal government is also making some changes to the mortgage qualification criteria. The most notable increase of limit of insured mortgages from 1 million to 1.5, lengthening the available amortization from 25 years to 30, and also removing the application of a stress test to mortgage renewals. So with softening market conditions and easier mortgage financing terms, this does represent an excellent time for buyers to take the move and get into the market. This is all for this update, and if you're thinking of making a move or investing in real estate, don't hesitate to reach out. See you next month.